Good morning, it's Harvey Jackson. Just going to go through some of the thoughts and possible recommendations for canola as this market is probably going to have some downside risk at some point here. Um, so Kyle had in his daily rundown just talking about looking at catch-up sales, so exiting long canola and the reverse to short the positions as well. So going long as the market kind of gets going into this week towards the 660, 680, and who knows, that could turn off today as well, but and then go short from the exit position down to 620, $600 value. And he did point out some of these other values of the veg oil. It just been priced in U.S. dollars. So canola price at 985 a ton versus palm oil at 997, and then soybean oil at 10 or 1014, and rapeseed oil at 1154, all in U.S. dollars. So it's a massive differences, and it's usually it's a kind of a flip on some of the dollar valuations as well. So canola could could remain somewhat supported, but just be careful with that statement because it's been tracking lower for some time here now. Palm oil is a little bit lower today, along with the rest. The crude oil, though, is just keeps on going up here now that the sanctions that Biden put on is well talked about as well. Here's some weather in Brazil and Argentina. So the target area is actually southern Brazil and Brazil and Argentina. Here you can actually see what the soil moisture looks like, and it doesn't look that bad. But anyway, it's just another look at it. So you can see here just precipitation. So they're getting some precipitation there, but the area that's of concern is right in there. And of course, we're kind of void of precipitation, but the southern hemisphere is getting it when it needs. Here's your temperature anomalies for the next 10 days, and you can see that U.S. is actually going to be a bit cold. That's probably going to drive up natural gas prices and the like. Uh, Argentina does look like it's going to get quite warm, so that is a factor there as well. So this is just a graphic of the where the rain is playing out in the next or in the last 7 days, and there's rain in the southern hemisphere for sure, as you can see. Temperatures again for just the next 5 days, and this is the cold area, and you can see that it's kind of surrounding it all there. So, but this is the coldest area because this is where it's anomaly, so it's a temperature variation. So, but this is where it's going to be cold, of course. So just a quick rundown on the prices here. Canola is down, 3 to 3.5. Rapeseed is down just marginally $1.50 or $1.25 to 50 cents. Soybean oil down 23 cents or 0.23 cents. Palm oil is down 57 ringgits, and crude oil is just basically flat at $77. And the diesel fuel market is down a little bit as well. Soybeans down a penny, and all the wheats are down just marginally as well. Canadian dollar slightly up. So here we'll just have a look at what the canola is doing. It seems to be right around this 50% retracement and above the 200-day moving average. So let's stick it and let's get up into this area is the idea, and it's not far from there. It might be worthwhile taking risk off ahead of next Monday, and towards the end of this week, I would expect a lot of risk getting taken off around the Trump inauguration. It's been rumored that there's going to be 100 plus executive orders signed the first day. Here's your November canola. I'm starting to reduce my area of maybe pricing. I'm starting to think maybe 640 is a good area to get started, and we did touch it. But if we can get into that 640, I would be a seller. Like if we're willing to sell new crop, we should be looking at old, or if we're willing to sell old crop, we should be selling new crop. Maybe a first sale. This is your European price of rapeseed priced in Canadian dollars. It's $150 Canadian, more expensive. You can see that it's pulled off from the over $200 value, but now it's bouncing around, but it's still way above the $100 mark or even $80 mark, where we're thinking that's probably fair market value. But just look at what this rapeseed is doing. It's wanting to break out of the top here. So if it does, it could actually support canola as well. regardless of the inauguration. But we are definitely going to get punished for a little wee bit through this time period here. Soybean oil, nice leg that we've seen here. Got above the 61.8, trying to get into that 78.6 retracement value, and that would be a great thing to see. But that would be in that 46.88 it says here, so it needs a little bit of climbing before it can get to that value. Palm oil, it did increase, and it got to the 20-day moving average, and now it's retracing. We'll see if we can get some support in that market. Soybeans, same idea. I just kind of snapped a line on previous values. So 1050 is kind of like if we can get above that, it should be probably looked at getting some more sales made. If anything, if you're undersold even on soybeans. Just Canadian dollar. I did a nearby snapshot of the retracement. So just when it's been chopping sideways since the beginning or very end of December to now, and we're right at the 50% mark. It's not really telling me to do anything, but still, it's based on our economy, and we'll have to see if we can, if we anticipate a government change, and there's still lots of rhetoric around that one. Crude oil, it's done nothing but go up in the last little few weeks here, so it's got lots of strength there, and you can see it in the diesel fuel pricing, and it would be recommended to, if you can get your spring needs kind of covered, I would be looking at getting some of it covered now, just for the fact that this we've got some pretty high prices ahead of us, and if these sanctions stay on, it's going to create some more issues. Here in wheat, basically chopping sideways to lower. Really, yesterday I didn't report wheat, but there was nothing to really report when you look at the chart. No news really. Still looking at higher values for new crop. Really nothing else to report here. Chicago, Kansas. We did do some Chicago, Minneapolis or Kansas, Minneapolis spreads, looking at that as a safe trade to do. So you're just selling one, buying the other, and expecting the spread to widen out. So expecting Minneapolis to widen out from 25 cents to, let's say, 40 cents or something like that. But talk to the broker. Looking at corn, it broke out above those higher values, still getting well supported. Looking at, if we can get close to this 490 mark, that'd be a fantastic move. We'll see if we can hold and continue to get there. It should be a sell, and then probably looking at going short there. Oats had a really good day a couple of days ago, or yesterday, and still trading a little bit green. And it's whether you want to trade some oats or not would be the question. Live cattle, wow, it just keeps on going. And here I was listening to the radio on my way to curling, and Hershey wants permission to buy over 90,000 tons of cocoa, and it's just unbelievable. And the cocoa futures are just record high, and if we look at what Hershey wants to do, that would be equivalent to all of the stocks in the exchange warehouses. So they do things a little bit different. They actually have exchange warehouses where they actually hold some commodity. And it's just unbelievable that there's that much that they want to buy all of it. So you could see a real squeeze on chocolate prices going up. But it's just because I heard this on the news, I thought I'd bring it up. Yeah, so that's what it looks like where we are right now. It's absolutely phenomenal what kind of values we're seeing. Next report, StatsCan, February 7th. So we'll be at Ag Days next week, Wednesday. So if I catch you guys wandering around, we'll maybe have a coffee or something. We'll chat later.